Hello, this is Greg Giardino,
And I'm Alison Hall.
and this is your Smarter Money. And today we would like to review with you, just in time for tax season, what you need to get put together to make sure you get your taxes done right. So I'll swing things over to Allison and she can kick us off and tell us a little bit more about what we need to make sure we file our taxes correctly here in 2024.
So it can be just so overwhelming to keep track of everything that you need to prepare to file your taxes. So Greg and I have put together a nice little checklist to get you organized and make sure tax season goes off without a hitch. Before we even get to the documents, let's get you prepped. First, get your general information together. Make sure you have names, dates of birth, social security numbers or tax IDs for you, your spouse, children, any dependents that you might have. Have a copy of your license ready to go for ID purposes, and then start thinking about where those birth certificates are for the kids, just in case there are additional ID requirements for them. Make sure your current tax preparer has a copy of last year's tax return. This is going to pull forward important information like carry forward losses or estimated taxes. You don't want to pay more than you need to. Lastly, have your bank account and routing number available. Once all your information is in, you'll need that for direct deposit refunds or payment, whichever applies to your situation. Now you're ready to gather documents. Of course, everyone's taxes are different, so we're going to focus on some of the most common pieces of information. First, there is your income. So if you're working, you should receive either a W-2 or if you're an independent contractor, freelancer, a 1099. Typically, these are made available by January 31st following the close of the tax year. I also want to note that it is especially important if you are a 1099 employee to track your business expenses throughout the year because they may be deductible. 1099s are also issued for distributions from tax-deferred retirement accounts like pensions, annuities, and IRAs. Those are your 1099-Rs. You should receive an SSA 1099 if you're collecting Social Security. And both of these are also issued relatively early in the year, usually within the first 2 weeks of January, but always by January 31st. Finally, the 1099 INT, 1099 DIV, which we get a lot of questions about this time of year. These are released for brokerage accounts or non-retirement investments, such as savings accounts. They outline all of the interest, dividends, and capital gains and losses for the tax year. These are released a little bit later than the other tax forms, not coming out until mid to late February usually. And even then, corrections are issued in March and April. So we usually don't recommend filing until at least the first wave of corrections is released in March. If you file too early and receive a corrected 1099, you might need to file an amendment, which is a pain. So that covers all of the income pieces, everything that's incurring taxes. Greg, I'm going to throw it to you so you can try to bring that tax bill back down. What should everyone be on the lookout for as far as deductions and credits are concerned?
Thank you, Allison. And from the deduction side, let's focus there. So do you have a mortgage, home equity line of credit, or a home equity loan? If so, you may have received what's called a 1098 mortgage interest form. So you want to make sure for itemizing, if you're going to itemize this year, you have that in place because there may be a possibility that you may have more than the standard deduction. So make sure that you have all relevant documentation, how much interest you paid, did you pay any points, origination dates, and so forth. So that's an important form to look out for. Now, this is not applicable to many of our clients, but maybe you can deduct some student loan interest. So for married filing jointly for last year, I believe it's 165,000 up to maybe a little bit under 195,000 of what's called modified adjusted gross income. If you have income between those levels, you may be able to deduct up to $2,500 for student loan interest. So there's another form, the 1095A form, the marketplace insurance form. What is that? Well, that's if you have the ACA insurance, the Affordable Care Act, or insurance from the exchanges. So for most of our clients, if they're before age 65, they may have a marketplace plan. Here in New Jersey, that's usually Horizon Blue Cross, while in Florida, that's Florida Blue. So Make sure you have that, because what that form is going to show you is what you paid in premiums for your insurance and if you received any premium tax credits. So typically, if you have between 100 to 400% of income above the federal poverty line, you may be able to receive a discount on your insurance. So that's going to be key to have that form. Of course, when we talk about retirement contributions, you want to make sure you don't over contribute. Usually a lot of employers, they have a stop mechanism to make sure you don't over contribute, but you want to be aware of how much you're contributing, and you don't want any penalties. Now, if you contribute to a health savings account, there's something called the 549.8 SA, which is for health savings account contributions. You want to make sure you're keeping track of that. And additionally, you want to have the 5498 for any IRA contributions. So whether it's a traditional IRA, a Roth IRA, a SEP, or a simple, this form really serves as proof that you made a contribution. So it's not a required form, but for record keeping purposes, really important to have. And usually this form comes out by the end of May, usually by May 31st. And if you made a direct rollover, you're also going to want to have proof of the 5498. Now, when it comes to the credit side of the ledger, did you make any estimated tax payments? Perhaps you overpaid. Well, if you overpaid, you want to make sure that any overpayment can be applied to next year's tax liability. So make sure you keep records of exactly what you paid each quarter and that you're not underpaying. And of course, if you have any children that have 529 plans and you took a distribution from a 529 plan, you'll get the 1099Q or the 1098T. And that will verify that it was indeed a qualified higher education expense. So this way it won't be taxable. And then under the other column, that is some miscellaneous items. So did you make a gift in 2024 to anyone? And if you went over the $18,000 limit, you may need to file what's called a 709 form. So that's for gifts above the $18,000 level. Did you make a QCD called a qualified charitable distribution? So for anyone who's over 70 and a half, you can directly take your contribution and send it directly to a nonprofit, and that can come right off your taxable income. Remember, it's normal to receive what's called a 1099-R for a QCD. So for example, if you took $100,000 out of your Charles Schwab account and you did 50,000 in a QCD, it's going to come back as taxable. So the onus is on you or your tax preparer to let them know that part of the portion was sent to a QCD and therefore should be excluded from your taxable income. And finally, if you do any backdoor Roth conversions, if you contribute to a non-deductible IRA contribution, you'll want to make sure that you're tracking that. Because down the road, when you come to take a distribution, you're going to get a 1099-R, and the custodian you work with, the investment company, whether it's Schwab, whether it's Fidelity, they have no idea how much is basis your after-tax contributions or what is taxable. So really important that you keep these forms together. All right, so once again, we hope you find these tips helpful in anticipation of a tax season here in 2024. And until next time, we'll see you soon. Take care.